All right, let's break down how economic crashes happen. It's this classic story of boom and bust.
So, why does this keep happening? Well, it's really about psychology. It's how optimism flips to pure panic. We're going to look at four major crises. You'll see there's a pattern that connects them all.
First up, 1929. It all kicked off in the roaring 20s. Everyone just believed stocks only go up.
Then came Black Tuesday. On October 29th, that whole illusion of endless growth just shattered.
The fallout was insane. A quarter of the entire workforce, 25%, lost their jobs. So the government had to step in. FDR's New Deal basically rewrote the rules for the economy.
Okay, fast forward a few decades. This time, the shock didn't come from Wall Street.
An oil embargo hit, and boom, prices quadrupled overnight, from $3 a barrel to 12. This created a total nightmare scenario. Economists even gave it a name, stagflation. And by the 2000s, here we go again, another huge boom, but this time it was all about housing. Wall Street bundled risky loans into products that looked totally safe. Spoiler alert, they weren't. Then came the trigger. September 2008, Lehman Brothers, a massive investment bank, just vanished overnight. To stop the bleeding, governments had to intervene big time with huge bailouts and a ton of new rules. And then 2020. This time, it was a virus that brought the entire global economy to its knees. The free fall was unbelievably fast. We saw some of the worst single-day drops in stock market history. So the response had to be just as fast. Government just threw trillions of dollars at the problem. But here's the weird thing. Wall Street started soaring while Main Street was still really struggling. So, what's the big takeaway? Crashes happen fast, recoveries take forever, and we seem to keep forgetting. It all makes you wonder, another collapse isn't a question of if, but when, and what will cause it.